In a recent update for subscribers of my newsletter, Crypto is Easy, I broke down the hidden story behind this Bitcoin rally, where over $1.3 trillion in profits sit untouched while losses barely register. But there's a catch. If sentiment flips, this setup could snap. Watch this snippet from that update to see what the metrics are really telling us and why the next move might surprise you. If you like this video, give it a thumbs up and share it with people you know. There are a few ways to see this, and you can start with the total unrealized profit and loss, which looks at the amount of profits people are sitting on that they haven't sold, they haven't taken advantage of that, versus the losses that they would realize if they sold. And it's very extreme. You got about $1.3 trillion in profits against $1 billion in loss. You can't even see it down here. So there's a lot of people who just sit, hodl, hodl, hodl. They're not selling. You also don't see any extremes in the miners position index. This looks at the pace of miners selling relative to historic benchmarks. It's down here. Nothing significant. No signs of extremes in the sell side risk ratio, which basically looks at, a lot of people use this metric to quantify the volatility risk because it shows how aggressively people are selling relative to the overall amount of profit and loss across the whole network. And as with all realized metrics, the peaks shrink over time. You can see this. They shrink less, lower, 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 lower. There's also skew from the ETFs. I'm sharing here because you can make an inference, which is when it's down here, it's not really extreme. It means that we don't have many sellers given all the activity that's going on in the market. You can also see this in the ASOPR. This is like my favorite metric. It's a barometer for the market. You can take a real quick look to the right side. It's elevated, it's high, but it's not extreme. One way you can think of ASOPR is it tells you who has the advantage, buyers or sellers. So when it's the higher it gets, the more the advantage is with the sellers. If you're buying, just understand you're buying at a disadvantage. Like conceptually, there's no it's hard to make that like concrete. I'm just using that as a concept to understand like what this metric is trying to say. And when it gets high, people do tend to feel complacent, blasé. They feel good about selling. They're not selling in large volume, but that's the mindset that you have right now. And I want you to keep all these things in your mind because I'm going to go through a few other things. I prefer a healthy equilibrium, but just keep these charts that I just showed you. Keep it in your mind. Hold that thought. And yes, I know the ETF skew some of these metrics. We can assume these things are directionally accurate. Don't compare today's number with previous numbers because there's a lot of things that what they might call statistical drift, where you can't make that comparison, but it is useful for looking at what's going on now in the moment. You just look to the right side of the screen, you can see that. The bottom line is we have a lot of people sitting on untapped wealth that they may feel compelled to protect should the market reverse to the downward. When you have all those people sitting on gains and not a lot of people sitting on losses, when you have things like the ASOPR up here, people generally will feel a lot more willing to sell than they otherwise would be. They're not doing it yet, but it's kind of unusual that you don't see as much selling. So you have to think about, well, okay, what happens if the situation changes? So that when the situation changes, we have that frame of reference and that perspective. The stablecoin supply ratio oscillator, it's gone up quite a bit. It's not in extreme territory. I mean, this is an oscillator, so there's no like extreme and not extreme. It goes up and down, but you can see up is usually somewhere up here before you really start to think about anything, generally speaking. But the point is not the level, but that it's gone up, but it's not like extreme. The thing is when this goes up, it's kind of counterintuitive. When this oscillator goes up, it means that stablecoins do not have as much impact on the direction of the market. Sometimes I talk about how their stablecoins are like fuel for the market on the way up and a cushion to support the market when it falls. And right now, it's a less fuel than before, it's less cushion than before, but it's not like anything too extreme. I would like to see the number of new addresses change this trend. It's been going down for a while now. It's been going down really since last fall, at the beginning of last fall, and it's kind of trending down. It's not like plummeting, but as you've seen in recent updates, we've lost a lot of really strong holders, old, long-time holders. Wallets that have shown a lot of conviction still stick around for big ups, big downs. They're not going anywhere. And those are exactly the kind of people that you want to keep in the market to build the foundation of the market. And this is another example of people who create a wallet that gives them their own address, a new address. They're interacting on chain. They're operating on chain. And people who operate on chain tend to buy more, hold more strongly, and stick around longer than others. And that's one thing you can tell is like, okay, well, you want to form a foundation for the market to really sustain this rally. You want people like this. You want more of these people. And we're seeing less. We're seeing less of these people. So you combine that with the fact that if you look at the realized cap hodl waves for 1 to 3 months, let me zoom in here a little bit. So now we're getting to the point where anybody who's bought within the past 1 to 3 months would be sitting in pretty big profits. And so what you want to see is they stick around. They're holding. So as new money comes in, they stick around. Price goes up, but they stick around because they want the Bitcoin. They don't want to sell. We want them to stick around so that we rebuild that foundation that we're losing as we lose these OGs, these diamond hand, these long-time holders. And we're not seeing that yet. We should see it by now, but we're not. This band represents everybody who bought from the end of February to the end of April, which is basically everybody who bought down here. Everybody who bought down here. And it's still like, it's negligible. There's like nothing. There's nothing trickling in. And the OGs keep trimming. So we need new buyers to stick around. The old buyers, when they sell, they'll eventually come back. But when they do, they'll bring less money back into the market. They're not going to chase the market higher. They will buy at much lower prices. So to sustain this like long-term thing, not these rallies, but something longer term, you need new buyers to fill the void. So let's see if we can get that. We don't see it yet. Maybe it'll come. With the rise of the ETFs and some of the other things that skew the hodl metrics, yeah, I mean, it does muddy the waters a little bit. You can't compare this level with that level and that level or any level before. So I understand you got to, give it a little bit of, it's not the best way, but when you stack that with all the other things that we've seen, all the different dimensions, all the different types of metrics and analysis and observations we can draw from all these different angles, it builds, it's the same story. And until these behaviors change, we're riding the coattails of the ETFs, Strategy, Sailor, Tether. And that's nice while the market goes up. It's great. But those are fickle sources of capital. They depend on sentiment. They depend on macro. They depend on an ample supply of capital. And those are all things that can run out more easily than emotional attachment or financial commitment, a genuine desire or conviction in the investment opportunity that you see with people who hold for long times when the market goes up and down and 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 up and down. Anecdotally, a lot of people who look at it, they've been subscribers for a long time, all the way down here. They've made their money. And they're done. Thanks, Mark. I'm out. We want that to reverse, or when these new buyers come in, see some signs that they'll stick around. That when the market turns back down, they'll stick around. They'll tough it out. Let's see if that comes.